All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPIcks, and this is our options midweek update. What I want to do here with today's session is walk you through what we're seeing so far this week and give you some updates on some current levels that we're looking at for the rest of this week, some technical levels to keep a close eye on. Also walk you through some trades that we've closed out this week so you can see how we've been adjusting to the current conditions, and then also take a look at some trades that are setting up and triggering in for us here over the next couple of days. So like I always do, I like to start out with the daily chart of SPY. This is the S&P 500 ETF. I don't use it to gauge entry and exit points, but I do like to use this to gauge overall market sentiment. Where are we at big picture? That way we can start to drill down into some of the individual names for entry and exit points. But I want to determine how aggressive or conservative I want to be. Do I want to use weekly or monthly options? Do I want to use my normal position size or cut back a little bit? Do I want to use more long calls, long puts, or vertical spreads? We have tremendous flexibility with options. That's why I love to trade these products. But we want to make sure that we're taking trades that meet our outlook based on technicals, based on price action, not based on what the news is saying, not based on an assumption or a hunch. I want to base my decisions off of real numbers. And what we'd like to do here is start out with the daily chart, looking for any type of exhaustion point, any type of key support and resistance level that is jumping out at us. I do have some very common moving averages on the chart, just a mix of simple and exponential moving averages. Down below, I've got our volume average. And then below that, we've got our ATR. So let's walk you through this. We have been talking the last few sessions how the market has been bullish. We've been cautiously bullish. And what that means is I have been using smaller position sizes, more vertical spreads, and I have been tempering my expectations. I have been looking for smaller winners. I'm not looking to go for the home run returns right now. Why? Because we're getting so close to the elections. Right? There's a lot of unknowns there. There's a very much a news-driven undertone to this market, right? I mean, everybody's waiting for the next headline to hit. You add to the mix the continued unknowns with the stimulus negotiations. Are we going to get another round of stimulus before the elections? And because of that, with all of that bullish talk going on, this market has definitely been leaning towards the upside. And you can see it the last couple of weeks. We've had a nice break to the upside. And, coming into this week, everybody was talking about how this market was really on a mission to make new all-time highs by the elections. Well, you go back to Monday's session, broke out, almost touched the 355 level. Really nice push to the upside. And since then, we have seen price action roll over. That does a couple things for us. Number one, that high from Monday's session becomes a near-term area of resistance that we're watching. We just finished below 355, 354.02 was the high from Monday. So that's our reference point on the upside. Past that, if we break back higher over the next couple of days, let's say we get another headline to hit, we break higher, the all-time high at 358.75 is definitely in the mix. If, however, this rollover continues to the downside, the first area of support that I'm watching is that pink line. It's the 8-period exponential moving average. And right now it's sitting at 345.29. That's the first area that I want to see tested. If we can break that level, we could see a nice little push down towards the 20 MA, which is at 340.53. We've got a nice little air pocket below us here should this thing get going. We've got a lot of names that are sitting on really nice profits here. We have the tech sector, which is really getting closer to the earnings unknown, right? Towards the end of the month, a lot of those big tech names are going to be releasing their earnings, and that can be a big driver over overall markets movement, right? We are sitting on a lot of massive gains on those tech names. I'm not saying they can't head higher, but they are pricing in perfection here. If they disappoint at all, there's a tremendous amount of room to the downside. We had the financials. I'll show you the financial charts here in just a moment. Citigroup, JP Morgan, Goldman Sachs, they have released their earnings this week. And so far, the reaction has been negative. They have sold off. Is that a precursor to what we're seeing, what we're going to see in some of these other names that have earnings upcoming? We'll have to wait and see. So 345.24 is the near-term area of support that I want to see tested over the next few days. Something to point out here, going into the end of last week, early this week, we've been talking about volume, how it's been okay, not great. I want to see 100 million shares traded. We're still not getting that. There's still a lot of uncertainty, a lot of people on the sidelines here. I've talked to just a ton of people lately that are on the sidelines waiting for the elections to pass. I think that's a big mistake. I think there's a tremendous opportunity here. Doesn't mean you have to get ultra aggressive. We can be more conservative. I think there's going to be a really good trading environment that we want to take advantage of here over the next few weeks. Ideally, on any type of a break higher or lower through those support and resistance levels that we just talked through, I want to see that volume spike. I want to see that volume level up above 100 million shares. Okay, we have not seen that level hit now in a while, so I want to see that level breached. Now, also something to point out here, look at the ATR. It's been very, very active. If you go back through, into late August, early September, we saw the ATR, we saw the average true range in this market really explode. And we've been in a very active environment ever since. However, the last week or two, we have started to see that ATR come in a bit. We have seen it go from above 6.5 to now $5.60. It's still a nice range. We have still seen nice range in this market intraday, but it is starting to contract. That's something to point out. What does that mean for me? Well, if we're not getting as big a range, that could potentially mean, hey, let's take a look at some additional monthly opportunities in the monthly expiration cycles. So let's not press it with the short-term weeklies if the range isn't there. And then also take a look at more vertical spreads. I love to buy long calls and long puts, and I'm still open to doing that right now. But if the range is going to continue to contract, that's not conducive for those quick moves up and down. I've been having really good success with credit spreads here lately because the volatility still has been active. We still have pretty good range, but it is starting to contract, and that's ideal for those credit spreads. That's the approach that I'm going to continue to take. I'm going to continue to trade a lot of vertical spreads. When I buy the long calls, long puts, I'm going to continue to trade smaller size right now, at least until we get through the elections. That's my plan of attack, personally. If we take a look at the internals here today, volume ratios, very, very mixed. And this is why I love to look at these internals. If we just take a look purely at the index numbers, you can see red across the board, right? It's been a weak session so far. It's really easy to look at those numbers and say, hey, this has just been a bloodbath. This market's getting beat up. But when we start to take a look under the hood a little bit, the volume ratio is still slightly positive on the New York Stock Exchange, slightly negative on the NASDAQ, nowhere close to any panic ratings yet. I mean, we on a panic type day, a big sell-off, we'd want to see those numbers at -2 to 1 at a minimum. We're nowhere close to that yet. The advanced decline line only at -800 on the NASDAQ. So we are seeing more names moving lower than higher today, but we're not getting that -1,000 reading that we typically like to see at a minimum. Only -400 on the New York Stock Exchange. So not across the board selling. Okay, it's a very mixed tape here today. You can see that on my watch list on the left-hand side. We have a mix, right? We have red and green there on the screen. The names that we need to see red for a sell-off, we've got some of that going on. You've got Amazon down $70. You've got Facebook down 3, Google down 4, but Apple is still up 39 cents. You're not going to get a big market move to the downside if Apple is not at the very least participating, right? And Apple's preventing any type of significant damage from being done, at least so far here today. We've had a couple of sell programs kick in, one mid-morning and then one here this afternoon. So we've had 2 sell programs kick in, but again, nothing extreme. And on the 5-minute chart, after seeing that wave to the downside throughout the morning, we've had a couple attempts at bounces here this afternoon. We just saw the VWAP, the volume weighted average price. That's that solid blue line. We just saw it tested on the 5-minute chart. And now we're starting to roll back over. So we'll see what happens here this afternoon into the close. Now, what is my takeaway from this? I've tried to cover that here as we go. I'm continuing to see warning signals. I'm seeing caution flags here everywhere I look. Doesn't mean we can't be active. I'm just going to be more conservative. And again, smaller position sizing for me, more vertical spreads. And I am continuing to, look at those monthly options out in November when possible. Okay. I'm not opposed to trading the weeklies, but if I'm going to trade the weeklies right now, I'm certainly going to do so with the credit spreads. Now let's go over to the 195-minute charts. These are the charts that I like to use for my entry and exit points. So let me go ahead and take a look here at SPY. We talked about this chart here the last few times we've connected. No doubt about it, we have been in a bullish market here. We've been in a pretty strong environment. But the last couple of days, we have seen SPY start to roll over a bit here. We have seen price test. We have seen price test the 8-period EMA, that blue and red line here. That level has to break. We have to see that level break if we're going to get another wave to the downside. And so far here today, it's held as support. Watching that level closely going into tomorrow. If that level breaks, we do have a nice air pocket down to the 50 EMA, right? That level down around 340. So watching this level closely. If you're in bullish trades here, I'm fine with that. You can continue to track those. I'd continue to lock in profit as you go on the upside. Am I looking to initiate new long trades here? No. Okay, we've already had a nice wave to the upside. I'm looking for a little bit deeper pullback before we consider any new long trades here on SPY. Not looking for anything overly bearish here either until that 8 EMA breaks. So we're kind of in a holding pattern here on SPY, waiting for the next break. IWM, this is the Russell 2000 ETF. This one's getting a little interesting because we have started to see price action pro below the 8 EMA. Okay, I am looking for a push to the downside over the next 3 to 5 days. Not looking for the bottom to fall out, not looking for things to collapse, but I am looking for a nice little pullback here on IWM. After being so strong the last few weeks, we're overdone. Looking for a nice, healthy pullback here. And what we did on IWM, just to walk you through a couple of trades that we took today, let's go over to the trade page. On IWM, we decided to look at the November 6 weekly options with 23 days left. I typically like to be in those expiration cycles that have between 20 and 40 days left to expiration. So if we open those up, we went with the 162 puts right here, looking to get filled for right around $5 or so. $500 per contract. So that's the route that we went here today, looking for a push to the downside over the next couple of days. Again, it's going to be tricky because this market, every dip has been bought, but we're definitely starting to see some rollover in some key areas. So definitely want to give it a shot on the downside here. Some of those key areas, let's take a look at the financials. Bank of America, Citigroup, JP Morgan, they've all had earnings out this week. You can see Bank of America definitely setting up a short trade here. We have our trend strength indicator going from blue to red, giving us a potential new short position. We haven't triggered in yet. Entry point that we're looking at is at 23.76. Want to watch these financials closely. If they bounce, they start to take the leadership. If they take the baton from the tech names, that could prevent any type of weakness from continuing over the next few days. But if they continue to head lower and the tech names give it up, that's a recipe there for a nice healthy pullback with follow through. So watching some of these names closely. Citigroup, very similar story. We have had earnings come out. This short trade did trigger in 43.62 was the entry point. Tiny profit on this trade so far. Again, looking at long puts here in the financials. Smaller size. And when I say smaller size, I have been trading with around 50 to 75% of my normal position size. I've been scaling back a little bit solely because of all of the headline risk in this market. We can see the most beautiful technical patterns in the world, but all it takes is one headline to hit and chaos is back into the ballgame, and both the upside and the downside. So I just been cautious, trying to stay as diversified as I can with smaller risk with these trades that we're looking at. JP Morgan, symbol JPM. JP Morgan and Goldman Sachs have actually hung in there. JP Morgan actually did have some decent earnings. Very similar to SPY in that if you're not already in a bullish trade on JP Morgan, not looking to initiate anything new here. Okay, I would wait for a deeper pullback. At the same time, not looking for anything on the short side yet. We have not seen price action confirm on the downside yet. So just in a holding pattern there. Out of the financials, I think Citigroup and Bank of America present better opportunities for the downside here over the next couple of days. Let's take a look at a few more that we took action on here today. Symbol MRVL, this is Marvel Tech. We did get price action to the upside. We did hit an overbought condition. How do we quantify that? Our pulse indicator down at the bottom did plot yellow, indicating that price action is overbought. indicating prices between a 1 and a 2 standard deviation move on the upside. Looking for a push lower out of this pattern. We did get the 8 EMA to break this morning. Okay, doesn't mean I expect the bottom to fall out, but what we typically see out of this pattern is either a continued period of consolidation or a reversal to the downside. So what did we do? Pull up the trade page a second. We took a look at utilizing a call credit spread. I want to be more conservative. I want to put on a trade that would benefit from either that neutral outlook or the pullback. If I just buy long puts here, that's too aggressive. It's too aggressive of a bearish outlook. Not expecting the bottom to fall out. I'm expecting a little bit of a choppy pattern to kick in here. So what we did here earlier this afternoon is we went out to the November 13th options, the ones with 30 days left to expiration. We came out to the 45 calls out of the money. We right-clicked on those, went to sell, selected vertical, and we decided to sell the 45-47 call spread. So we're selling the 45 call, and we're buying the 47 call at the same time. That way we're in a risk-defined trade. Right now, we're currently pricing this spread at 62 cents. If I click on confirm and send, we would be collecting $62 per spread. That's the max profit potential on the trade. My max risk is $138. That's also the capital required per spread to put the trade on. We're right around risk 2 to make 1. I'm okay with that because we've got 5 ways of making money on this position. Let's talk about the directional aspect first. We make money as long as MRVL stays below 45.62. That's that break-even point right there. And that level is calculated by taking my 45 strike call that I sold as part of the spread. We're adding on the 62-cent credit that's collected to put the trade on. That gives me my break even at 45.62. I don't care if Marvel moves up, down, or sideways. As long as it stays below 45.62, we're okay. We can make money. We also make money from time decay adding up and from volatility decreasing. Anything that would cause the options to lose value, that is how we make money. My target level on this trade, when I can close it out and book between 50 and 75% of my max profit. So again, if we collect 62 cents, that's my max profit potential. So I'd be looking to buy this thing back for between 15 and 30 cents or so. That would give me 50 to 75% of my max profit. All right, so that's a trade that we're going to be tracking here over the next couple of weeks. Finally, let's take a look at SPY. This is a trade that we just closed out here today. I've been talking quite a bit in these sessions about our overnight pop trades. And this is one that we put on yesterday afternoon. Okay, we always put them on going into expiration. SPY does have options that expire every Monday, Wednesday, Friday. Really nice feature of SPY. So what we did yesterday afternoon, because this market has been just kind of in a holding pattern, right? I mean, we've had some big movement to the upside, but we started to hit some overbought conditions. We also know that every dip has been bought. We have not seen much on the downside here of late. I didn't want to just come in and lean bullish or bearish. I decided to put on a neutral trade. And what we did is we used an iron condor. All that means is I sold an out-of-the-money call spread and an out-of-the-money put spread at the same time. What we did is we went to the 354 calls. I'm going to right-click on those, go to sell, and select iron condor. It's going to pop up an order down at the bottom where you're going to see 4 different options. An iron condor is put on by trading 4 options at the same time. We sold the 354, 356 call spread. And then at the same time, we sold the 348, 346 put spread. The goal of this trade is for price to stay between my short strikes. So I wanted to stay between 354 and 348. Price is at 348.53 currently. We sold this spread here yesterday afternoon, and we were filled at 58 cents. We collected $58 per spread. I tied up $142 of capital per spread to put the trade on. So very reasonable cost, not tying up a ton of capital. It didn't give us a huge profit potential. It gave us $58 of profit potential per spread, but the design of an iron condor is to generate some profit in an indecisive market. If you don't have a strong bullish or bearish opinion, you can bet on the stock staying inside of a range. And the nice part about volatility being active right now, when the volatility gets high, the options get more expensive. That allows us to create a wider iron condor. So we closed this trade out. We closed it out for 18 cents here earlier in the session. It's actually trading for lower than that right now. It's trading for 12 cents at the moment. So we closed it out for 18 cents. It gave us $40 of profit per spread, $120 of profit if you're following our risk parameters, where we like to risk $500 per trade, $500 or less. This gave us a 28% return on our capital. Now, you're saying, okay, Mike, you're talking $120 of profit, 28% return. I mean, why are you getting excited about that? I get this question all the time. I'm thrilled with this because, number one, we are in and out in less than 24 hours. We opened the trade yesterday afternoon. We closed it out first thing this morning, right after the open. So we were able to book a profit, and we did so without needing SPY to make a big move. I didn't need it to move. If it just stayed dead sideways, we were able to make money. This is a very forgiving trade. Doesn't mean I'm just going to go exclusively to iron condors and never buy a call or a put, or never just sell a call spread or a put spread. It's just one tool in our toolbox. It's a way for us to get diversification and generate some income when the market is not making a big move. When I can book $120 of profit, tying up less than $500 of my capital in and out in less than 24 hours, and that's huge. You start to do a couple of those a week. Remember, SPY has options that expire every Monday, Wednesday, Friday. You start to add that up. That's a nice little additional source of income. So these overnight pop trades are really powerful for us. We're not limited to trading SPY. We can use these overnight pop trades on any stock or ETF that has weekly options. But on any of those other products, we would place those trades Thursday afternoon into Friday expiration. SPY is the only product that we can trade Monday, Wednesday, Friday. All right. So if you'd like more details on the overnight pop trade, I'd love to connect, or any of the trades that we talked about here today. If you would like more direction on how to place and manage those trades, I would love to connect. Feel free to email me directly. Mike@netpicks.com is the email address. We've just had a really great stretch with these trades. I mean, it's just been phenomenal. So, and we don't expect markets to settle down anytime soon through the elections. So it's just a great time to be active with some of these trades. So I'm going to wrap it up here for today. If you have any questions, go ahead and type those in now before I wrap it up. I will be back on Friday afternoon for our weekly recap, and we'll take a closer look at that point, see what the market does between now and then, and also take a look at some potential new trades setting up for next week. So enjoy the rest of your day, everybody. And I hope to see many of you back here on Friday for our weekly recap.